Hello and good afternoon. We are here with all the important topics right before the U.S. stock market rings the bell. Nvidia's stock experienced a more than 3% decline despite continued bullish sentiment from Wall Street analysts as the company approaches its highly anticipated earnings report. The stock, which has surged over 25% since early August, faced a dip as analysts remain optimistic about Nvidia's potential to beat expectations, driven by strong demand for its Hopper GPUs. KeyBank's John Vin noted that modest expectations for Blackwell shipments in the upcoming quarter have likely been offset by increased bookings for Hopper, which could propel Nvidia to exceed its earnings forecasts. Despite this optimism, concerns remain regarding delays in Nvidia's next-generation Blackwell chips, reportedly facing up to 3 months of delays. These delays could impact future orders and create complications for major customers like Microsoft, Meta, Google, and Amazon, which together contribute to around 40% of Nvidia's revenue. Nevertheless, most analysts maintain a positive outlook, with Goldman Sachs reaffirming Nvidia's position on its conviction list and predicting continued strong demand for AI infrastructure from cloud service providers and enterprises. Nvidia's stock, a significant contributor to the market's August rebound, remains a focal point for investors, with many expecting the company to reach new highs despite current challenges. Intel's stock took a significant hit, dropping 6.1% following reports that progress on its 2 new chip fabrication plants in Germany may be stalled. The semiconductor giant had planned to construct these facilities in Magdeburg, a project known as Silicon Junction, with an investment of around $33 billion, supported by a substantial government subsidy of approximately $11 billion. These plants were expected to be operational by 2027, producing high-performance semiconductors that would expand Intel's fabrication capabilities, both for its own chips and for third-party customers. However, recent media reports suggest that the timeline for the project is now uncertain, sparking concerns among investors. This uncertainty comes as Intel is undergoing significant restructuring and cost-cutting measures, leading to speculation that the company might reconsider its plans for the German facilities. The high costs associated with building these plants, coupled with Intel's broader strategic shifts, have raised doubts about the project's future. This skepticism is further compounded by competition from Taiwan Semiconductor Manufacturing, which has already started construction on its own $11 billion facility in Dresden. Intel's stock, which has already fallen about 60% in 2024, starkly contrasts with the broader semiconductor industry, where many companies have benefited from the surge in AI-related demand. Walmart has sold its 144.5 million shares of JD.com, valued at approximately $3.6 billion, marking the end of an 8-year partnership with the Chinese e-commerce giant. The shares were sold at a price of $24.95 per share, representing an 11% discount from JD.com's previous closing price. Despite the sale, Walmart has stated that it will continue to collaborate with JD.com in other capacities. Walmart initially acquired a 5% stake in JD.com in 2016, aiming to strengthen its retail operations in China. Over the years, this stake grew to about 10%. However, the partnership has been troubled by China's volatile economic environment, including a slowdown in the property market and reduced consumer spending. Additionally, Chinese tech stocks, including JD.com, have seen muted returns in recent years. The iShares MSCI China ETF, for example, is trading at the same level as in 2016, and the CraneShares CSI China Internet ETF has declined by about 13% since then. Walmart's decision to sell its JD.com shares is part of a broader strategy to refocus on its core operations in China, particularly the expansion of its Walmart Supercenter and Sam's Club businesses. Sam's Club has seen growing success in China, with 48 locations currently operating in the country, catering to consumers increasingly drawn to wholesale club deals. This is all we have for you this week. We are MEXEM TV, and we will be here next week, same place, same time. Goodbye.